Welcome back to the next video in this series. Now we just learned about the main important thing with accounting and recording for different transactions. We also learned about how to note them down through debits and credits. Next up, I'm going to talk about what documents you make these notes in. We actually have two. The first one is called our journal, and the second one is called our ledger. Both of these documents are where we note the transactions that affect our accounts. The only thing that sets the journal and ledger apart is how it lays out the account. Again, through our accounting, we're just telling a story, and the journal and ledger are the pieces of paper on which the story is written. In our journal, we look at our transactions by date. So every time we make an entry in our journal, we note down the date, we write down the different accounts that were affected, and we note down whether or not these accounts were debited or credited. It's also really good practice to write down a little note with each transaction describing what had happened and why it went down. In our ledger, we're simply looking at transactions by account. So the ledger is simply a long list of our accounts. For each ledger entry, what we do is write down the date and write down how much money flowed in or out of that account. The ledger is very helpful because it also shows the balance or the value of an account at any given time. We have to note down transactions in both of these documents. They are both equally important. So when a transaction happens and you're analyzing it, you make a note in your journal and you make a note in your ledger at the same time. The best tip that I can give you is the fact that you should record entries for transactions as they happen. It's great practice to do this. Honestly, accounting information is less helpful when you record them retroactively, aka when you look back on all your transactions and start making journal entries for them. Also, if you record them as you move along, as the transactions are occurring, you're saving yourself a huge headache when the company program is ending and you're writing down all your financial statements. The journal and the ledger are the building blocks that we make our financial statements out of. They're the building blocks of communicating our company's value. So remember, every time a transaction occurs, record it in both the journal and the ledger. In the description box, there's going to be links to example journals and ledgers. Now, yours won't look exactly like this in the company program. Your transactions will happen on different dates, you might have different accounts, whatever it might be. These examples are just to show you an example of what a JA company's general journal and ledger can look like. You can use them and base it roughly off of them. We're going to wrap up in the next video by talking about financial statements. What we have done so far is successfully determine and track the value of our company while keeping our equation in balance. Now we're going to get all these little pieces together and finish it all off by creating our financial statements. I'll see you in the next one.